Hello from Cadlet's Wealth Management. We wanted to start our first ever market update here at the end of the month for our video series. And we want to just give you a quick little update. Hopefully most of you or all of you got your taxes filed and we're able to get that behind you. That's usually a busy time of the year. And with that, finances are on the top of your mind as well. So if you're, not talking to your financial advisor or your tax person on maybe the year coming up and what you need to look at, I would advise to make sure you're doing that. A lot of stuff is changing. The new tax laws are going to hopefully decrease taxes for a lot of people going forward. There is some changes too with Roth conversions and that. If you do Roth conversion, you're not able to undo it. So you want to make sure that you're really looking at that to make sure that you are going to qualify for that, and that's still a good move. As far as the economy goes, we have a little market update for you that we saw jobless claims here just again recently were down. So, again, unemployment is at a very low rate. I think we see that across the board where hopefully, wage inflation isn't really getting out of control too much, because if wages go up, obviously we have more money to spend, but then companies are going to have more expenses. You had durable good orders were actually up, so those are things that are going to last for quite a while. And with that, we also have consumer confidence that's creeped up. So all those things are really positive for the economy. You have to remember, though, that the market is usually 6 to 9 months ahead of itself. So now that the market is kind of flatlined here recently, it's looking behind and saying, okay, economy, are you doing what we thought you would do? And are you going to continue doing what we think you're going to do? So we still think the trend is up, but I think right now the market is trying to digest itself and go, okay, can we really start moving forward again because the economy is going to be kicking in the gear? Or have we seen the best results? And we did have a great year in 2017. So I think the S&P, if you look at it, is trading between roughly 2,300 and 2,600. Really hasn't gone much below its trend line, but we are looking for that next catalyst to really participate and push us higher. And just recently, you had I know Facebook been in the news and Google and all these big tech companies. They're really still putting up the numbers, but I do think you are seeing a little switch to maybe overseas. And then also a switch to kind of more, the healthcare. The banks are doing well with interest rate raises, and industrial is still. Boeing had a really great number. So on that note, with interest rates, we do see the 10-year Treasury moving up to around that 3% range. Still very historically low, well under 4.25%, which we do see as historical range. But with the interest rates moving up, it does put pressure on everybody else that is trying to borrow money, especially companies, home buyers, that kind of thing. So if interest rates get a little bit too out of hand and too hot here, we're going to have to worry about is that going to eat into corporate profits. So right now I still think the trend is your friend, and it's heading up. We will keep an eye out if we do see anything that is looking that the trend may reverse, and we are seeing a little bit more of that selling pressure continue. So with that, we thank you for watching, and we'll be back soon.